Hey everyone, just had a very interesting conversation with Michael Gord, the founder and CEO of a Web3 venture capital firm, GDA Capital. Aside from fruitful conversations about the market, fundraising, and inner workings of GDA Capital, we have delved deeper into creator economies and how the entertainment industry can be amped up by crypto. Just a quick disclaimer, nothing in this conversation should be considered an investment, tax, legal, or financial advice by either Michael or GDA Capital. Thanks for tuning in, and let's jump into the video. Today, I'm very happy to introduce Michael Gord, the co-founder and CEO of GDA Capital.
Thanks, Leo.
So you have founded multiple crypto-focused companies, included GDA Capital, GDA Group, MLG Blockchain Consulting, and Metaverse Group. Could you share your crypto story and how these companies came about?
Yeah, so I went down the rabbit hole in 2011. I was in first year university at the time. I saw a Wired article, Bitcoin had just gone to $30. And I was familiar with Bitcoin the year before at less than a penny, which I thought was a scam. But this asset that I thought was a scam has gone up 300,000% in the past year. So I was fortunate to see that Wired article, which went into the underlying technology, piqued my interest. I went down the rabbit hole and decided it was the most exciting technology in the history of the world, and I wanted to tell anyone who would listen. I initially got involved by starting the cryptocurrency club at McGill University, where I was going to business school. I then started Bitcoin Canada, started doing national events. I took on a board seat of the Bitcoin Association of Canada, started to help to lobby the government in Canada for positive regulations for digital assets, kind of representing the student community. I connected the Canadian collegiate ecosystem with the American collegiate ecosystem, which was a network called the College Cryptocurrency Network, set up by some American Ivy Leagues, and took on a leadership role there, contributed to expanding it globally. I've been starting businesses ever since.
Looking at it in 2024, what is the most exciting crypto use case for you? And is there a sector that you have been holding on to this whole time?
I think anything that creates mass adoption is interesting for me. That's been my focus for the past decade, creating mass adoption of digital assets. I think any infrastructure layer project or any type of infrastructure that can have multiple applications being built on top, or dozens, hundreds of applications built on top, I think is tooling that is providing the highest value. So yeah, any infrastructure project is interesting.
Do you have any particular projects that pop up in your mind from the infrastructure sector?
We have one portfolio company called Norris that has built out a cybersecurity mesh network in the decentralized physical infrastructure niche. Has built out a quantum resistant layer 1 blockchain. So that's what I think is probably the biggest story in blockchains right now that not everyone knows about. But yeah, lots of exciting projects.
Right. And exploring the opposite angle, what main crypto industry gaps do you see now? What services and verticals you wish to propel? And it can be as broad or as niche as you like. It just what pops your mind.
Cool. Interesting thought with that is that if we had been talking about this in 2014, 15, 16, 17, 18, 19, 20, there would have been a huge number of just gaps in the market. Everything from technology to regulations to infrastructure. Like there was just a huge amount of gaps. Today, most niches of digital assets does have projects actively being built, and it's more just a question of commercialization. Maybe identity has no winner yet on the blockchain, but there are identity solutions. So I wouldn't say that's a gap.
Just looking into like these theses, identity, of course, is a big theory, like that's been on the get-go from, like the beginning of crypto. Do you see any more like that are really, really good theses, really good ideas, but we haven't been able to kind of materialize them yet?
Identity, quantum resistant digital infrastructure, micropayments, I think is still in the early innings. Anything to do with AI and interoperability, I think are still very much early innings.
Can you elaborate a bit more about your stance there? Like what you're looking for, like maybe especially from the GDA Capital perspective, and fundraising and investments. What are you looking for in these niches that you still perceive as gaps, for like good protocols, etc.?
Yeah, again, I wouldn't say that there are gaps. I think there are projects that are building these markets. They're just in the very beginning stages. Um, so yeah, we do have exposure to companies in these niches. I just think that, for example, AI on the blockchain is a rapidly growing market opportunity. Interoperability is still, and there are starting to be better solutions. They're just not commercialized. Like bridges, I would say, are still the primary means of creating interoperability behind blockchains, but they are super prone to having errors, smart contract problems, and not user friendly especially for the everyday user. It's like if you're emailing someone that is using Gmail instead of Hotmail or whatever, you don't need to have some, it's done automatically. So I think that's going to be the case with blockchain soon enough.
Right. And just building up a bit on top of your previous answer, how you're interested, in the mass adoption of crypto, and that's what you want to see, maybe in the coming years, maybe decades. We'll see how that unravels. Do you have any like mega theses, either like personally or for GDA Capital, that like you always follow and you don't think they will really change in the coming years?
Our thesis definitely, well, our thesis is mass adoption of digital assets. Anything that contributes to that is interesting and relevant for us. I think the niches that are most opportunistic and that have the highest percentage chance of growing fast for asymmetric return opportunity change year after year, quarter after quarter. But yeah, our thesis stays consistent: mass adoption of digital assets.
Ranging between any technical, business, or social realms, what are the two things you would take out of the crypto equation immediately?
I'll harp on bridges some more. I think bridges are not a user-friendly way of handling interoperability. I think bridges are a super complicated means of using interoperability with terrible security, and I think that it's almost certain that bridges will be abstracted out of the equation. And then I would say centralization. I think that the market is moving towards decentralization, and any type of centralized infrastructure is bound to lose market share to decentralized solutions over time.
Do you think it's reasonable to think that bridges and centralized parties would kind of become irrelevant in the next year or two, or this is more of a long-term like kind of
Bridges,
assumption?
I think bridges will have a shorter lifespan. I think centralized infrastructure will stick around for longer periods of time because people still like, or at least a percentage of users. But I would say a decreasing percentage of users prefer centralized infrastructure. Yeah, I think bridges will be replaced reasonably soon, and centralized parties, I think, will lose market share over the coming years and decades.
But diving deeper into GDA Capital, in June 2023, the Canadian government awarded you the title of the fastest growing Canadian company of 2022. Can you identify what led to receiving this award?
Good question. It was a little bit out of left field. I'm not sure how we were on the Canadian government's radar. But yeah, I mean, exploding revenue numbers, exploding headcount, number of acquisitions, exploding portfolio size. Yeah, that was a surprise to us as well, but pretty cool to be recognized by the Canadian government.
Yeah, usually you see it the other way around, especially in the US. If
Right.
you're on the
Usually
radar.
we're on the radar for opposite.
Yeah.
Well, part of that as well, but yeah, not necessarily being recognized. More so, challenged.
Yeah, exactly. So I was surprised as well, pleasantly surprised that you got to get the positive experience there. So what is, in your view, what is the key added value of GDA Capital to portfolio companies? And how do you plan to preserve this added value and stay at the forefront of the maturing competitive landscape?
So with regards to added value, we're very activist investors. We don't just invest and take a wait and see approach. We definitely get our hands dirty, and because we have been in the market for over a decade, we want to contribute access. But we're also not just investors; we're also operators. We have and the executives of our team have founded and exited a number of businesses. We have launched dozens of digital assets. We've contributed to financings in the hundreds of millions of dollars for our portfolio. We've brought hundreds of millions of users to portfolio companies over the years. We've connected enterprises, global governments, professional sports teams, celebrities, etc. So yeah, we definitely get our hands dirty and contribute to creating value, validating valuations, and increasing valuations of our portfolio companies.
Right. And you yourself, and maybe for the VC as well, do you have any role models in the crypto space?
A16Z, I think, are top at everything that they do, and their crypto arm is pretty impressive. Andreas Antonopoulos, I don't know if he's super active with venture capital anymore, but he was certainly in the early days a pioneering force in Bitcoin and blockchain adoption. So I'll give him a shout out.
Right. And do you think because A16Z is more like of a traditional venture capital firm that started investing rapidly in crypto and then even created a separate crypto venture arm, do you think that kind of spearheaded their success in crypto and knowledge and, kind of being these role models for other VCs just because they were very successful in the traditional finance world?
Yeah, well, being founded by two founders that have created unicorn companies in Web 2 and then built an incredible track record of financing businesses in Web 2. Definitely a good background and precedent for them to enter Web 3 and be able to earn a high ROI and be able to add value to the market.
Looking at the crypto market as a whole, we have cycles, that have more upsides and have more downsides with every cycle coming along. Do you notice any discrepancies between the recent, more 2019 bear market and then what we experienced, in 2022, 2023? What discrepancies do you see between these last bear market cycles?
Each time the bear market cycle gets faster, as in it becomes bullish again faster. Also, while there's a significant collapse, each bull run, Bitcoin goes up a lower percentage, so it drops a lower percentage as well. And I would say that that legitimacy increases each bull run as well. Like in 2012 or beforehand, bull runs or bear runs were there every week. There was a media channel that was predicting for the death of Bitcoin. Whereas this past bull run, I think that there was a critical mass of people that were confident that Bitcoin digital assets are here to stay, and it's just a matter of time until it comes back. But one difference between this run and previous runs is that the previous bull runs have all been driven by retail, whereas this run is entirely driven by institutions. Bitcoin is still very low compared to the previous run as far as Google searches. It's not being spoken about in the media. There's no retail frenzy. Your cab drivers or grandma's friend's cousin is not asking you for digital asset tips. It's institutional money that's coming in this time. So I think it's only a matter of time until retail starts to participate as well. And way more institutional involvement and government involvement is yet to come.
Yeah, as we've seen, of course, also with Bitcoin ETFs, and now the whole, upside with Ethereum ETFs getting approved as well. There's much more space for institutions, even beyond crypto, come into the space and have their share. Looking more into your portfolio, there are quite a few creator economy slash entertainment industry investments along the years. And Web3 entertainment is an emerging sector, changing incentive, ownership, and monetization structures of usually rather stagnant and expensive traditional entertainment channels. And we have many hurdles to overcome in the traditional world, including content piracy, lower revenue shares, and vague royalty agreements. What solutions, in your view, can crypto offer to help solve these widespread struggles in the entertainment industry?
Anytime that you have a platform that can deplatform people, crypto solves that. Payments and payments are cheaper with crypto. Paybacks are unavoidable, like in the sense that you can't have people canceling payments. You can have incentives for participation to growing networks pretty much across the board in crypto. There's incentives for contributing to network effects. So if you were an early contributor to Facebook, you could have received value for your early participation. Facebook can't provide a penny of fiat to contributors. They also can't provide stock, but they can provide micro cents of digital assets for contributors to the network. Advertising can be replaced with digital assets. Virtually all Web2 niches can have a digital asset that powers it and be more efficient and more viral.
And of course, entertainment is a very broad concept. It includes music, film, media, content creation. Have you noticed either of these sectors attracting more attention in the crypto community?
I think every sector right now is attracting more attention in the crypto community, and all traditional businesses are very much en masse right now, starting to realize the need to have a Web3 strategy.
What about GDA Capital? Are there any entertainment sectors you are more keen on than the others?
No, in general, we're opportunistic. We like to have exposure to businesses that we think we can directly add value to, and that are in the pre-seed to Series A stage, where they have a business that either is not commercialized that we think can be, or that is the very beginning of the commercialization that with a few key integrations can be commercialized quickly. Any business that fits in that thesis is interesting for us.
Diving deeper into this, one of your investments, Tune FM, is a Web3 music streaming platform, and its main objective is to improve monetization structures for artists by introducing music NFTs and streaming royalty micropayments. But many other similar platforms aim to do the same. We have Audius, we have Glass Protocol, Bitsong, amongst others. What unique offerings of Tune FM swayed your attentions, and how did it stand out from the competitive landscape?
I think the only one there that has real market share is Audius, and I believe Tune has way more technology that's fully built, is profitable, and has a market cap that's like 10% approximately of the size of Audius. So I think the risk reward opportunity for Tune versus Audius is significantly higher. Considering, like, for example, Spotify is a $10+ billion company and hasn't found a way to become profitable with tens of millions of users and it's still a venture finance business. Tune certainly could benefit from further financing, as can most businesses, but Tune has found a way to be profitable with like 300,000 users and a much smaller footprint than Spotify. So I think as they continue to grow, they have built a business that actually is scalable and is profitable. So
do you think Tune FM and maybe Audius as well can directly compete with platforms like Spotify in some years ahead?
I think they already are. I mean, they're probably already on Spotify's radar. but Spotify is too big of a boat to move fast. So I think it'll be difficult and slow for Spotify to integrate the type of Web3 monetization tools that Tune has built and that I think are on the roadmap for Audius to build. But yeah, in the coming years, there's going to be interesting consolidation or passing the batons from the kings of Web2 markets to the emerging dominant players in Web3 markets.
Another relevant project in your portfolio is LootMogul. This athlete-led sports metaverse incorporates e-commerce shops for brands and athletes and digital collectibles with in-real-life rewards like live events and merchandise. What opportunities can such metaverse projects bring to players and fans?
So LootMogul already has hundreds of professional athletes that are on board. They're already signed up with the NBA Players Association. They have a number of professional sports team and stadium partnerships. For the athlete, they provide a stronger link to fans. For fans, they provide the ability for you to play games and earn income and or perks from playing games or from purchasing assets, where you, for example, own a digital seat in the virtual metaverses or like the stadiums in virtual metaverses where users can play games, but that the ownership of that virtual real estate provides you with real perks in the actual stadiums, because LootMogul is directly partnered with owners of teams and actual stadiums. So it provides incentive for the team owners to have the opportunities to have meet and greets with the athletes that are on board, or to have perks that are unavailable in the traditional market. I don't know if there's another company that's as deep in professional sports, GameFi, and metaverse.
Right. And what about the companies in charge and these sports clubs? What upsides do you see for them cooperating with LootMogul?
So additional revenue, additional virality, more engagement with fans, and like I said, the ability to reward and incentivize active fans with unique experiences that are only available through the Loot program, but that provide deeper fan engagements and ultimately larger revenue for team owners or stadium owners.
So when looking at traditional venture capital firms, especially the ones in Silicon Valley, blockchain VCs do not appear that different apart from, doing token deals and maybe speeding up the fundraising process. Are there unique funding models that you see emerging within Web3?
Yeah, for sure. Now businesses in Web3 have the value of their network, which is the fully diluted market cap of their digital assets they can use for financing. There's NFTs, which can be used as kind of early incentive passes to collectors. And then there's the equity, which was the only tool that was traditionally available for founders to finance.
Do you think in the coming years we will get rid of this like more of a traditional investment process of equity in the blockchain space?
Will traditional equity firms still exist? Probably, but I think it'll be increasingly difficult for them to raise capital from LPs because the risk return opportunity for faster times to liquidity with digital assets, for asymmetric return opportunities with digital assets, or for businesses like venture investment companies that can hold digital assets on their balance sheet. You can also have equity plus tokens or equity plus NFTs, or there's just the ability to earn a higher ROI, I think is because of the additional value being created from this stuff is so much higher. I think it'll be hard to compete for venture capital companies that don't have digital assets as part of their thesis.
Yeah, as part of the thesis. But for example, purely like native blockchain VCs and investment firms, do you see them completely staying away from equity deals and truly going into this like blockchain fundraising thesis of token deals NFTs?
Yeah, I think equity is still going to be a part of the capital stack. Yeah, I think it's important to have equity as a consideration, digital assets, NFTs as a consideration. Any asset is, has the potential ROI attributed to it.
Yeah, and it really depends on the project structure and the development roadmap, right? Because some systems do not really work with token deals. Pushing tokens too early or too unnecessarily could also damage the project success in the long term. So I agree with you. It's important to keep all the avenues open for fundraising strategies. Looking forward, what would you advise to newcoming startup founders in 2024? What should be their focus point now, especially concerning fundraising?
Start. It's probably going to be the best 2 years, last 2 years, and best 2 years to raise capital in the blockchain universe. I think that after these 2 years, the competitive landscape will be much stronger. I think the return opportunities will be lower. I think if someone is considering starting a blockchain company or is looking to access capital, then start.
Thank you, Michael, for coming on to the show. It's been great having you and learning what you've been doing in the crypto space and your thought process on today's market overview. Please share with our listeners how they can follow your work and investment journey.
Thanks, Leo.